Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday. It is March 22nd, 2012. Got a few market charts I want to look at today. The first one being Canada's market, the TSX. This one we've talked about in the past, and I've not been bullish on it for a while because of what we talked about. You had this previous shoulder formation here, a nice head formation here, pulls back down, makes the other one that was looking like the start of the head and shoulders pattern. Then she started to roll over here, and that's basically what she's confirming. She's not confirmed it yet. To confirm, you have to actually close below the neckline, and which is actually extending out this way. But like we saw with oil, at the same time that we brought up the head and shoulders pattern potential on oil chart, we also mentioned that here. We've already seen the oil chart confirm and move lower. I've been watching the oil for potential buy opportunity when it bottoms, but right now it's on the move to downside. And you'll also notice that the Canada's market is doing the same thing. So if this actually closes down below this neckline, you get closed below this, look for this distance here to be basically, you can take that distance and subtract it from the breakout point, and you'll get a target for how low you expect price to go. Basically, test the previous low over here. So that's something that you need to be focused on and concerned about. You shouldn't be long this market in any way, shape, or form. If you've been following us, you're not. You've made a couple trades to the long side and been stopped out as you made a little bit of a profit, but you're not long at this time, so don't worry about it. But if you are long, or you know someone who is, that's not a good place to be long right now. Okay, for the past at least the past week, we've been out of the market. We didn't want to be long this market. She'd been overextended. We told you back during this time frame, not this particular chart, but U.S. markets, you could have traded long to look for a test of the previous high. That came and went, kept going. We told you do not chase it. You'll get another opportunity. She'll pull back, testing the support, which was basically previous resistance, now becomes support. We talked about this last night as well, that the pullback is going to start to find a bid at that middle Bollinger Band line, which we saw today as well, intraday. So keep an eye on this. If we get a little bit of a sell-off here, don't worry if she dips below this line. That's possible. It's a minor support. It doesn't break down the overall uptrend. It would actually have to take out this line, that support line, to actually break down the uptrend. So right now, just keep an eye on it and be looking for a buy opportunity in this particular average. That's what I would be doing. She's going to be looking for another test of this previous high up here. You're not going to be able to shift the uptrend into a downtrend until you get a series of lower highs, and we don't have that yet. Right now we have this high point, and this high point is higher. So the only way, even if tomorrow was going to be it, you'd have to have a move back to the upside to test the previous high point. If you fail at that point, then theoretically you'd be stopped out on a long trade that you had, and then you'd be moving lower, and we'd change our strategy from an uptrend to a downtrend. But we haven't had that yet. That's why this pullback, you still want to be looking for a buy opportunity. Look for that situation where you're going to get the bottom and reversal back to the upside, and you'll know that when you see it. We'll talk about it and we'll post it on our website. But the main thing here is that you're still in an uptrend, therefore you should be still looking for long trade opportunities, for those opportunities that you can find where you've had a good pullback. We haven't had that in all market averages, but in this particular case we have a series of higher highs, higher lows at this point, and so we're still bullish on the markets. We're just not holding in this pullback. We're looking for a buy opportunity. We talked about the oil chart yesterday, told you the same thing we talked about past couple of weeks, a head and shoulders formation here. You got the first shoulder, the head formation, the second shoulder, and then she closed yesterday actually below the neckline, which confirms the head and shoulders pattern. We told you to look for a sell-off to test this previous support. That's where you're going to start to see it again, and that's where you're starting to see this wick out of the bottom of this today's candlestick formation, showing that there is getting some buy pressure there. Still too early to be a buyer for me, but it is something that I want to bring to attention. Start watching it. Keep an eye on this, as you can find great buy opportunities when you do find support, and as long as the candlestick formations are all right, and so forth and so on. So for now, we're just watching it, but it is something that has followed exactly our pattern that we've talked about, and it should be something that's on your radar. The S&P 500 Large Cap Index, this one basically the same story as the Dow Jones Industrial Average. However, she's not pulled back as much as the Dow Jones, and therefore I prefer the Dow Jones over the S&P 500. I would be looking for more of a pullback here. Notice the previous high here. That's going to be our resistance line, which is now going to be acting as support. Should be acting as support, and that's in line with the middle Bollinger Band line, where you should be also finding some support there. So a little bit more of a pullback, and then we'll be there. looking at that possible reversal point there. We don't know just yet. But again, if I had these two different charts to look at, the S&P 500 versus the Dow Jones is giving a better pullback than the S&P. Therefore, I'd be more inclined to buy the Dow Jones rather than the S&P. Just me personally, okay? So that's something else that you need to keep on your radar. Again, if you do dip below this, a little more overshoot to the downside, that's fine. That's actually free money as long as you hold this support line here. This is the major support that keeps this in an uptrend. If you break the minor support, it's no big deal. Typically that happens and we just reverse back to that minor support, hold support, and then advance again. The main thing is it doesn't break down the trend. Okay, so keep an eye on it. There's an opportunity coming. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. I'd like to ask you guys again today, do not give this video a like. Don't give us a thumbs up unless you share our video online. We need your guys' support so we can grow faster, provide better services, so forth and so on. You know how it works. It's 100% free, but we really need your guys' support to keep growing. That's really important to us. So if we're doing something that you appreciate here, please be a pal there and share our videos online with your friends, and we would appreciate that. All right? God bless, take care, and I will see you in Friday's video where we go over all the major market charts, okay? Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.